The big chop is a sign of the top. What's up, everybody? Welcome aboard. It's Bubba's Daily Update, and what a choppy day we had today. Markets were up huge early, down big, back to up, and then somewhere around the middle unchanged, depending on which index you look at. The Russell exploded higher. Then the Dow was up a little bit. The S&P was up moderate, and the NASDAQ was up pretty good. So it's kind of a mixed picture as we look at it. But again, this is just a sign of topping action. We didn't get any real follow-through from yesterday's action, and we're going to look here to see prices work their way lower. Again, as long as we stay in this pattern, we're going to be very consistent and be very comfortable with the top of the market is in. You've got a lot of reasons to believe that there's a market's going to go a lot lower, but you've got everybody out there trying to convince you that the market's going a lot higher. I don't see a big up move here. If there's a big move coming, I think it's going to be the downside. I see no reason to believe that we're going to all of a sudden turn this around now that we've started to see some of the cracks, some of the sieves that are coming out of this market, and some of the reasons to believe why we're going to go lower. You know, you've got debt, interest rates, all these factors, and of course we've got the jobs number coming up Friday. In the meantime, bonds were higher naturally. We figured they'd make a rally at some point. You had gold had a big spike up, certainly off of a bottom, looked like a short squeeze to me. Again, we're in that range in gold, 1,300 to 1,360. Right now we're in the middle of that range, so we'll see how that trades out. Oil was up, reversed, came lower. Again, I think oil is going, looking for 58 as my next target to the downside. I would sell any rally that came along in oil. I don't see any reason to be in it. You've got the Bitcoin, which got hammered a little bit, down about 1,000 today. But again, it's really been very, very quiet and not a lot of action. The dollar was under heavy pressure, and again, this is more of the Fed manipulation of the dollar trying to control these interest rates. Now, we know that the Fed has always failed, so I don't think this time will be different here either. We can only base it on a track record on their history, and their history is that they have typically failed at every opportunity to do the right thing. So we'll see how that plays out from here. In the meantime, cattle was a little bit softer today, along with hogs. I think those are just buying opportunities. Again, I don't see any reason to get nervous. Wheat was down about 15 cents, came all the way back, closed down 3. But I think the grains are overbought here. I look for a little bit of a pullback. Now, again, only if you're a quick trader, if you want to take a chance here. If you're looking for to be on the long side, then wait for a dip to buy into. I think that's a much better play when you look at the overall big picture. But again, the news about the tariff is causing all kinds of grief. I don't think it's that big of a deal. You've got the rumors of Gary Cohn maybe leaving if the tariff goes through. You know, there's a lot of stuff going on. But in the meantime, the markets are going to do what the markets are going to do. We don't have to worry about individual things or individual stories when the markets are around. They're going to do what they're going to do, and the money is going to dictate. Nothing else. You can forget about the stories. And just one quick point. Once again, I wanted to vomit today. I heard this talk about high-frequency traders. I just want to explain one thing to you real quickly. High-frequency traders are the reason that commissions are so cheap. High-frequency traders are the reasons that we've got such tight bid-offer spreads. So, yes, they can grab a little bit of an edge, but would you rather give them a couple of pennies now, or would you rather go back to paying $100 commission and having wide spreads? That's as simple as I can put it. The high-frequency traders have done a service to the market with what they do because they provide very tight markets, which gives us a better chance to execute in these markets. In the meantime, let's look for more of the same action. I'm expecting a big flush sometime this week, but it may hold up until we see what happens with the jobs number. In the meantime, this is Bubba's Daily Update. Todd Bubba Horwitz. And of course, don't forget highschoolinvesting.com. If you want to help us out, go to patreon.com/Bubba Trading. If you do, I'll give you one free week of my advisory service in the futures. And also don't forget to get the Bubba Show every day between 4 and 5 Eastern Time at libertytalk.fm. And of course, the markets are mixed, and we'll see you back here tomorrow because I'm mixed up. See you tomorrow, everybody. Have a great day. We'll see you later.